Ladies and gentlemen, good day and welcome to Q1 FY25 earnings conference call of Torrent Pharma Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sudhir Menon, Chief Financial Officer and Executive Director Finance. Thank you, and over to you, sir.
Thank you. Good evening and welcome to the first quarter earnings call for FY25. We continue to see strong performance in our branded markets. Our two largest branded markets, India and Brazil, both have done well. Brazil, while secondary sales continue to grow in double digits, primary sales got impacted this quarter due to flood in one of the provinces, and therefore quarter 2 should normalize this impact. The second impact which Brazil had was on the currency depreciation of around 5% for this quarter. On the generic side, Germany continues to grow well. US on a rolling quarter basis is consistent, while it has registered a degrowth due to a high base last year. In terms of the key financial performance indicators, we have reported a revenue of 2859 crores, up by 10%. The operating EBITDA is up by 14% YOY. Other expenses include one-off of 20 crores, and adjusted for this, the underlying operating margins are 924 crores, and the EBITDA margins are at 32.3%. The overall leverage, which is the net debt to EBITDA, now stands at 0.65. I'll now hand over the call to Aman for India business.
Thanks, Sudhir. India revenues at 1635 crores registered a growth of 16%. As per the AIOCD secondary market data, the IPM growth for the quarter stands at 8%. Torrent's chronic business grew at 14% versus the IPM's chronic business growth of 8%, driven by strong revival in our cardiac divisions and continued traction in anti-diabetes new launches. Torrent has entered into a non-exclusive licensing agreement with Takeda and has commercialized vonoprazan during the quarter. Our brand Cabvi of vonoprazan was the first licensed product to be launched in the market and is ranked number 1 as of June 2024 based on the AIOCD dataset. The initial response of the molecule seems quite promising. This marks our third licensing deal in the recent quarters, and we continue to scout for similar opportunities which can bring more novel treatments to the Indian market. Field force strength at the end of the quarter stands at 5,700. We continue to see PCPM improvements in recently expanded divisions. Overall PCPM for the India business during the quarter stands at 9.4 lakhs, and we are confident of crossing the 10 lakh PCPM mark once again in the next financial year. At the end of the quarter, Torrent has 20 brands in the top 500 of the IPM, with 18 brands more than 100 crore sales as of June 2024. We expect the India business to continue outperforming the market growth. Our focus during the year will remain on improving our market share in chronic therapies, new launches, improving field force productivity in expanded divisions and regions, and continuing the scale-up of the consumer health portfolio. I will now hand over to Mr. Sanjay Gupta for the international business.
Thanks, Aman. We will start with our branded generics market of Brazil. As per IQVIA, market growth was at 11% for Q1. Secondary sales growth for Torrent was at 12%. Based on internal sales, Q1 constant currency revenue was reais 123 million, registering a 8% year-on-year growth. We would be launching 5 products during the rest of the year. Going forward, we intend to maintain about 3 to 6 launches per year, and currently we have 19 molecules waiting for ANVISA approval. In Germany, constant currency revenue was 32 million euros, up by 9%. During the quarter, we won incremental new tenders, which will start delivering incremental sales from Q3 and Q4 of 24-25. For the last 5 quarters, we have increased our overall value of wins in tenders. This is in large part due to cost optimization efforts, which has led to increased competitiveness in the tender segment. Our overall share of the German generic market is increasing steadily quarter on quarter and currently stands at 6.1% for the quarter, with Torrent ranked number 5 in Germany in the overall generics business. In the US, we registered constant currency revenues of USD 31 million, down by 13%. Adjusted for one-off income in Q1 of the previous year, constant currency degrowth is at 9%. Sequentially, US business delivered stable revenues backed by new contracts. During the quarter, US FDA inspected our manufacturing facility at Indrad, and at the end of the inspection, we got a Form 483 with 5 observations. Torrent has responded to the US FDA within the stipulated time, and we expect to hear back from the FDA in the next 90 days. I would like to conclude by stating that our focus will remain on deepening our presence in the branded generic markets of Brazil, Mexico, etc., while continuing to grow in Germany and returning to profitable growth in the US. Yusuf, we can open the call to questions now, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thanks for taking my question. Aman, my first question is on the India business. We saw 15% growth in this quarter, which seems pretty strong given we already have Curatio in the base. Could you give us some color on how we should assume growth for the India business? Is this growth rate sustainable? And also any color that you can give us on the Curatio asset that now it's been fully integrated. What's the traction that we are seeing there?
Yeah, so the breakup of the 15% growth, roughly based on the AIOCD data for the quarter, is 2.5% volume, 8.5% price, and 4% new products. This is all fully organic driven because Curatio is in the base. The Curatio business grew at 19% during the quarter, so it's seeing continued high growth traction in almost all the top brands. In terms of margins of the Curatio business, also we see consistent improvement now quarter on quarter. So in terms of acquisition integration, I believe we are on track or even slightly ahead of where we anticipated to be, as the growth momentum should continue. Going ahead, depending on how the market growth plays out, 15% was a Q1 growth, but I think somewhere between 13 or low teens growth for the rest of the year should be doable.
Understood. That's helpful. And Sudhir, on the margins, right, gross margin expansion again this quarter was pretty significant if I look at it from a quarter-quarter, year-on-year perspective. How much of this is sustainable? Is this a level we should be able to maintain? I understand there's some mixed benefit because of higher India growth this quarter. And also, if you could give us some color on what the 20 crore one-off was related to.
Yeah. So I think from a gross margin perspective, Neha, last year, if you look quarter on quarter, I was between 74.5 to 75, which I believe is something which should be sustainable. So 75 should definitely be sustainable, right? The additional 0.7 which we got in this quarter, probably because India has done much better and the branded segments have done better than the generic segment, possibly attributable to that. But I think definitely 75 is something which should be possible for the full year, is what I believe. The 20 crores one-off expenses pertains to one of the potential international opportunities which we were evaluating and finally didn't materialize actually. So that's the expenses which we have in quarter one.
Okay, got it. And sorry if I may squeeze in one more. I know I might sound like a broken tape here, Sudhir, but capital allocation, how should we think about it?
Well, I think the way you should look at Neha is that FY26, I think I should be net cash, right?
Yeah.
And therefore, whatever EBITDA generation or cash flow generation is happening, that would await capital allocation to be done, right? And I think acquisitions have been part integral part of our growth story. And that's something which we will continue to pursue as long as we believe that it's going to create a long-term shareholder value.
And given that you mentioned there was an international opportunity that we were pursuing, it's fair to assume that we are also open at looking at larger deals outside of India. And which focus markets would these be in then?
Yeah, I mean, if it's a good aspect, Neha, definitely yes. But provided everything fits into the financial framework which we follow, right, in terms of creating value.
Understood. Thank you so much, Sudhir.
Yeah.
Thank you. Before we move to the next question, a reminder to the participants: to ask a question, you may press star and 1. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good evening, and thank you for the opportunity. My first question is on the U.S. business. So, quarter on quarter is broadly stable. So, just wanted to understand how supplies from Dahej plant is picking up, because Indrad is yet to clear. So, I assumed when we got clearance for Dahej, there was expectation of better pickup to happen here. So, some color on the U.S. business, please.
Correct. The supplies from both Indrad and Dahej have been stable, right? Because our current business was not impacted by any of the FDA actions. So what we are seeing now is a lot of site transfers are getting approved from Dahej. So gradually the products which were made at Indrad are now being made at Dahej. So the volumes have remained about 4 billion pills a year, and the mix is changing with Indrad coming down and Dahej ramping up appropriately.
So, are we expecting run rate to pick up slightly better than what is the trend in last 2 quarters or so?
No, that will depend upon new approvals, right? So we are expecting some new approvals to start coming in. Hopefully also from Indrad. We have some good filings from Indrad which are still left in our portfolio. So as soon as the approvals start coming in, that will lead to a change in the base of business. It's not really linked to supply. We don't have supply constraints in terms of capacity constraints.
Sure. And you mentioned one of the objectives for this year is to improve profitability of U.S. business. So right now it's profitable or it's a loss-making segment?
I'll let Sudhir answer that. Sudhir?
Can you repeat the question, Damayanti?
I was asking, one of the objectives which you mentioned in your opening remark is improving profitability of the U.S. business. So currently, I just want to understand whether it's profitable or it's a loss-making segment.
So I think pre-R&D expenses, we are break-even, kind of break-even for the U.S. business. And that's what Sanjay was implying, that we want to move towards a profitable path as far as U.S. is concerned, post-R&D.
Sure. And my second question on India business, so on the consumer health segment, if you can just talk about the progress in key brands and what kind of marketing and promotional expenses you intend to incur for the brands there.
So the key brand, which is Shelcal 500, has grown at 17% for the quarter. And again, this may not entirely reflect in the external data sets, given that it has a different set of stockists. So this is the internal number of the consumer plus RX growth of the brand. We think high teens growth looks sustainable in the next few quarters. We are continuing our base level of advertising spends and retail activation. The overall spends this year in consumer are slightly higher than last year. So I think that what's there in this quarter should remain similar in the upcoming quarters in terms of percentage of spends.
Okay, so A&P will broadly remain at the current quarter level going ahead, and then you intend to grow top line by better engagement, etc.
That's right, broadly similar. Based on seasonality for some products, there may be some higher spends by 5 to 7 crore in a quarter, for example, but that shouldn't be too material. Broadly, what's captured right now is the rest of the year's A&P spends.
Okay, and consumer is what percentage of India business right now in terms of value contribution?
So we had mentioned last time also that we don't look at this separately in terms of contribution to sales because it's part of the RX business and consumer. So we look at the spend separately, but the overall top line is seen as one business together. This is essentially capturing Shelcal, Teddy Bar, Aha Glow, and Unienzyme, which are the 4 key brands. Shelcal 500 is somewhere in the vicinity of 300 crores. Unienzyme is about 150. Teddy Bar is close to 140, 150, and Aha Glow is about 80 odd crores. This is the broad kind of base that we have. We are looking at maybe adding one more product towards the end of the year as well to this.
Sure, that's very helpful. Thank you.
Thank you. Participant, you may press star and 1 to ask a question. Next question is from the line of Tushar M. from Motilal Oswal. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, you are. Please go ahead.
So just on the Germany business, if you could, while you have already highlighted in the comments that it would pick up in the coming quarters, but broadly, what kind of sort of growth for FY25 one should think about for Germany business?
So Germany is usually in the range of mid to high single digits. So if we keep winning tenders, it will be towards the high single digit growth rate.
Got you. And also on Brazil, while I've missed the opening remarks, so where the floods have impacted, say, Q1, but let's say on a full year basis, how to think about the growth, given that, we have good number of launches plus an interesting launch in Tokyo of FY25.
Correct. So Brazil, in previous calls also, we've highlighted that the long-term trend is similar to what we see in IQVIA. So primary sales tend to be lumpy depending upon, time issues that crop up from time to time, channel inventory, etc. But over a period of 2, 3, 4 quarters, we've seen that Brazil has always grown in line with IQVIA trends. And currently, IQVIA is showing us MAT and a quarter growth of about 12% for Torrent. So I would say that this is a good indicator of where we are with our business currently. So I would say between 12-13% is the underlying growth rate for our Brazilian business.
All right, so that's it. Thank you.
Thank you. Participant, you may press star and 1 to ask a question. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Sayan Mukherjee from Nomura Securities. Please go ahead.
Hi, good evening. So just one question on the acquisition. So if you're looking at international markets, are you interested in new markets? Are you looking at branded piece like what you have in Brazil, or you would be interested in generics and some sort of technology acquisition? What are the areas that would interest you at this point?
Science branded, definitely yes, right? But we're not restricting looking at assets which is only branded focus. If there are some good assets which are even in the generic segment, it's something which we would look at and then decide whether we want to go that way or not. But branded definitely is a priority.
Okay, and would that be in the markets you already have presence, like Brazil, Mexico, or you could look at completely new markets, where you would sort of set your base?
Yeah, a combination of both, right? New market definitely yes, and even within the existing market, if there are entry possibility in terms of the other therapies where I'm not present, that's something which is also open to pursue.
Okay. The next question would be to Sanjay. Sanjay, I think a few quarters back you mentioned U.S. business, once the facilities are cleared, ramping up to 250 or 200 million kind of an annualized revenue in 2 years or so. How do you assess that at this point? Do you think that's still achievable?
So it honestly depends upon the ANDA approvals that we get, right? So far we've seen the first wave of approvals from the Dahej has come in, but they have been more on the site transfer approvals rather than new ANDA approvals. So I think I was expecting about 7 to 8 approvals this year, most of them in the next 3 quarters. So depending upon how it goes, we have a couple of expectations for a couple of oncology approvals. Some approvals which could have an upside in terms of lesser competition. So that will drive the sales growth. So I would still expect between 5 to 10 approvals this year that would propel us forward. And next year onwards, it should be a higher rate.
Okay, and the limited competition opportunities you expect in this fiscal or next fiscal?
I would expect in this fiscal, but again, you don't have it until you have it, right? So there are other people also trying for the similar opportunities. So we'll see who comes out ahead.
Okay, great. And just one last question. Can you share your R&D number and also what's the expectation or what is it that you are factoring in as a full year spend?
So currently, So it's around 5%. And I don't think it's going to be materially different for the full year. So I think 5% is the number for this year.
Okay. Thank you.
Yeah.
Thank you. Participants, to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Sumit Gupta from Centrum Broking. Please go ahead.
Hi, good evening. Thank you for the opportunity. Sir, in the domestic market, what is the MR count currently, and by FY25, how much do you plan to take it to?
The MR number in Q1 was 5,700, and we had mentioned last quarter that we expect maybe 300 to 400 reps addition by the end of the year.
Okay. And so second question is on the tax rate. So you still maintain 25% tax rate for the FY25?
No, FY25 should be around 30%, the same as quarter 1. And maybe from from next year, I should start getting into the new tax regime from India perspective. So overall tax could be around 26-27%.
Okay. Thank you, sir.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Next question is from the line of Vibha Ravi from Cityline. Please go ahead.
Hi, am I audible?
Yes, you are.
Okay, so I just wanted to know what is the acquisition strategy going to be going forward? Whether the company will be looking at brands via slump sale, or is it also looking at stake acquisitions from, say, promoters or from PE firms?
I think it's a very complex question. I think all along what we've done, the acquisitions which we have done is either a business transfer through slump sale and a company acquisition, which was the recent one, right, Curatio, which we did. So all combinations open, I would say. I think thinking would be more in getting 100% stake of whatever we plan to acquire.
Thank you. Next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Hi, thank you for taking my question. My first question is on Indrad. We did see, observations and a couple of them were repeat in nature. So how should we think of, resolution timeframe for this particular plant of ours?
So we would expect a response in the October timeframe from the FDA, and we think there's a high likelihood that the FDA would approve the plant, and the plant would be VAI or NAI. But we'll still like to wait and see because there were 5 observations, and so we cannot be sure that it'll be 100%.
Okay, but response has gone from our side, and we are now awaiting FDA to kind of, comment on that.
Correct. There is a little bit more heavy procedure for a plant with the baggage that Indrad has for it to be reviewed inside the FDA and for the status to be changed. So it is a higher level of approval, I think. So it takes some time, yeah. But by October should be there.
Okay, thanks for that. And my second question is on Curatio. You mentioned that even quarter over quarter we have seen improvement in profitability there. Do we still have scope of improvement in that asset?
Yes, we do. Still some way to go.
Okay, that's great. Thank you so much.
Thank you. Next question is from the line of Tushar M. from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity again. So just on price hike in the India market, it's been now almost 3-4 years where similar kind of price hikes have been taken at the portfolio level. It's just like to understand, how sustainable this is in terms of, subsequently having the growth in GF business based on the price hike.
Yeah, it's been broadly in this range last couple of quarters, and possibly should be okay to in the next couple of quarters as well. Beyond that, we don't have exact visibility, but should not be materially different. Some quarters here and there's a bit of a mixed change, so reflection sometimes is higher, lower. But this 6.5 to 8% price growth is what I think should continue.
Is it largely on the similar set of the products within the portfolio, if you could clarify that?
Similar set meaning?
As in let's say across the portfolio, across the therapies, there are different brands and products, but let's say over past 2 years, the kind of price hikes we have taken is broadly for the same set of products or brands, or it's different in different years.
Yeah, it could be different across years, depending on competitive situation. Every year we take a call and based on overall absolute pricing also, sometimes that takes we decide whether to take an increase or not take an increase. So I would say it's very varied every year.
And just lastly on the US, generics, while the sales has been pretty stable quarter-over-quarter, but any comment on the price erosion on the base quarter?
So similar to previous quarters, I would say mid-single digit type of price erosion continues. And now we are able to compensate for it by increased market share and some small launches here and there.
And do you still continue to see the API prices falling for your US generics portfolio, per se?
Sudhir, you want to comment on API prices?
We don't see any material impact on the API prices from our perspective.
Understood. Thank you. That's it from me.
Thank you. Participants, to ask a question, you may press star and 1. We have our next follow-up question from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, thanks for taking my question again. Aman, on the India business, if you were to hear the commentary and the strategy of some of the players in the industry, everybody seems to be focusing on the chronic business, and we still see, Torrent doing particularly well in the chronic segment. One, have we changed the approach of how we are, continuing to gain market share given competition? I know competition has always been there, but, has there been any change and therefore change in the way we look at the India business strategy? And, is there a risk that, either trade generic or, the new competition could slow that growth in the chronic business? Just your views on, our chronic growth versus the competition.
Yeah, there has been a change, I would say, because obviously last couple of years, everyone in the market has been focusing more on the chronic side. So there had to be a response to kind of counter that or ensuring that at least we don't lose market share and try to gain market share. And a lot of that has been addressed through the expansion activities that we've undertaken over the last 12 to 18 months, which I believe are now showing meaningful results. So that particularly in the cardiac diabetes side are looking positive at the moment. Another thing on the cardiac side particularly, if you recall, we had a high dependence on Losar, which was our number one brand. It still is our number one brand. And there has been a systemic kind of approach to de-risk our cardiac portfolio from Losar because it's a very low growth brand now because it's a less preferred molecule. We now have adequate growth engines in place to kind of de-risk Losar completely so that it doesn't affect our overall cardiac growth. So Losar is our number one ranked brand right now. I think in the next couple of quarters, it will drop down the rank because there are brands growing significantly faster. And by next year, I think Losar should be down to rank number 3. So all these are the measures that we've taken to this counter the recent change in the market. And we believe this is a sustainable level of growth in the chronic side at least, within 1 or 2% should be okay to sustain.
Understood. Thank you so much.
Thank you. Next question is from the line of Praful Bora from InCred. Please proceed.
Hi, Sunil, the 12 to 13% growth that you mentioned in Brazil, this is in constant currency or the reported growth?
No, constant currency.
Yeah, so the recent movement in Brazilian real, it's almost come up from 16.5 to 14.9. How does this impact our overall growth numbers and the margins in Brazil?
So quarter one, So I think while revenues go down in terms of INR, the expenses also go down similarly, right? And therefore, to the extent of the profitability which Brazil has, that could be the impact which would be seen from a bottom line perspective. And Brazil today for us is 10% of our revenue. That's the way to look at it. So the impact would not be significant.
Sure. Thank you.
Thank you. Next follow-up question is from the line of Vibha Ravi from Sightline. Please go ahead.
Yeah, hi. This is with relation to Takeda, the vonoprazan deal. Can you hear me?
Yeah, we can hear you.
Yes.
Right. So this is with regard to the vonoprazan deal, as I said. Since Takeda is now licensed to others like Zydus and Dr. Reddy's, so do you expect your, the growth trajectory, you spoke about, positive response on launch, but how do you expect this trajectory to be affected? And the second question is also in continuation kind of to what Nihar had asked earlier. So do you expect, you also spoke about more licensing deals. So do you expect them to be in the same areas where you're already currently strong, or you're looking at certain white spaces where you would like to grow? Thanks.
Yeah, so the Takeda license was always non-exclusive, so there was always the likelihood of more players coming in. It should not materially change the trajectory of our current brand. There may be some loss of market share, but the absolute value should be quite reasonably good, I would say, for the year. Wouldn't want to comment as of now on what the annual sales could look like because it's only been 1 month of launch, 1.5 months of launch. Maybe next quarter we can share some light on that. But as of now, we remain rank 1 in the market. In terms of licensing deals, we prefer to add in our existing therapy areas, but we haven't restricted it to that. So if there is any new interesting opportunity in a non-core focus area, that's something that also we are open for as well.
Ms. Vibha, does that answer your question?
Yes, it does. That's sorry. Yeah, thank you so much.
Thank you. Next question is from the line of Aarti Rai from Equintus Wealth Advisories. Please go ahead.
Hello. Thanks for taking my call. I had a question around the margin. So during the last quarter, Q4, we did mention that there's a possibility of a margin expansion, say around 50 to 100 basis points. This was post, factoring for the consumer health business, the spends around that, and US being a very important driver at top and bottom line. So does that still hold true, or there have been some changes there, with respect to the margin expansion that they're looking at for the full year?
No. I think the guidance given holds true. So on a full year basis, you should see that margin improvement happening.
Okay. So given, the question comes in light where the US sequentially remains flat, so and that was supposed to be one of the key drivers as well.
Yeah. So I think for the subsequent quarters, you'll see some of the other launches coming in as far as US is concerned. So at least that should drive positively to the overall performance of the company. That is what was implied earlier.
Okay. Thanks.
Yeah.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next follow-up question is from the line of Sumit Gupta from Centrum. Please proceed.
Thank you for the opportunity again. So just one clarification on the US business. So you said that you expect the US business to be profitable post R&D. So by when? Is it next quarter, or can you please explain the timeline?
So I think I cannot predict that because it all depends upon the new product launches which will span up over the next 2 or 3 years. And depending upon what kind of revenue sizes we have on all those product launches, it will depend when we can be reaching the profitable zone. And I think the indication for you is that so long we didn't have any new product launches, so it was quite negative on the overall performance from US. But with the new product launches coming in, at least from an overall performance perspective, US is going to be positive. I think that's the way to look at for the next 2 to 3 years.
Okay. And so for the next 5 to or the overall 5 to 10 approvals that you are targeting, so it will be including oncology, right?
Correct.
Okay. So apart from oncology, also are there other therapeutic areas, significant therapeutic areas?
Yeah, it's a diversified portfolio. And as you said, one of the therapeutic areas is oncology, which will play out.
Okay. Thank you, sir.
Thank you. Next question is from the line of Srikanth from Nuvama. Please proceed.
Hi, good evening. Just one question on the domestic portfolio. The 2 products that we have in our portfolio, Unienzyme and Vizelac, both have been doing quite well. And in fact, in the ongoing quarter, they have done quite a strong growth. So if you can explain what is happening here and how should we look at the future for these 2 products? Thank you.
Yeah, I think this quarter was higher growth than the usual run rate, probably because also, particularly in Vizelac, last year the acute season was a bit weak in Q1. So this year I think that has kind of normalized. But going ahead, both Unienzyme and Vizelac, we believe low teens growth is what should be doable.
Understood. Thank you.
Thank you. Next question is from the line of Abdul Qadir Puranwala from ICICI Securities. Please proceed.
Hi, sir. Thank you for the opportunity. So just one question. In your earlier remarks, you mentioned that Losar will split to number 3 next year. So could you highlight, which are the brands in the cardiac portfolio which is growing faster, and when we're talking about de-risking the entire cardiac portfolio, I mean, going ahead, how should we look at from a new product launches perspective as well?
We'd be better off sharing the brands once this rank change happens for comparative reasons, but there are adequate levers in place to at least ensure that the Losar-related slowdown in the cardiac portfolio doesn't really remain a concern anymore. There are at least kind of 4 to 5 different brands that have been selected and targeted over the last 12 to 18 months for this purpose, and those markets are all kind of future growth markets where we have a very strong market share position. In terms of new launches, currently nothing significant is expected in cardiac specifically. Some of the launches that we did last year were anticipated to do well, but somehow have not picked up in terms of prescriptions, so they may take a longer period. And that's usually the case in some of these niche molecules. They take time to get prescription traction. So not much of new launches in cardiac that will drive. It will be more of the existing brands that should drive the growth.
Understood, sir. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Next follow-up question is from the line of Vibha Ravi from Sideline. Please proceed.
Yeah, please forgive me if you've answered this question earlier, but at least I didn't hear it on this call. So the 10G plant was to begin commercial production from the first quarter, from this quarter, right? Q1 FY25. So has that happened? If you can give us an update on that. And second is, what is the reason of transferring, this antibiotic and non-antibiotic business to Apitoria? Was I audible?
No, I think your voice is not audible clearly. I mean, can you repeat the question?
Yes. I said please forgive me if you answered this question I'm asking right now earlier. But the penicillin plant was to begin commercial production in the first quarter, which is the quarter we're talking about, right? Has that happened? If you could give us an update on that. And second...
Just hold on. I think you got it wrong actually. I think the penicillin plant to start in quarter 1 was Aurobindo, not Torrent, is what I think.
Please forgive me for the question. Yeah, that's it. I don't have a question then. Thanks. I apologize.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. As there are no further questions, I would now like to hand the conference over to Mr. Sanjay Gupta, Executive Director of International Business, for the closing comments.
Yeah, just like to thank you for your interest in Torrent, and we remain available to answer all queries going forward. Thank you very much. Have a good day.
Thank you. On behalf of Torrent Pharma, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.